Yeah, good morning, everybody. Welcome to the pit report. I'm sorry, the morning volatility report. It is I, Andrew Giovinazzi. My last pit report for the week, or vol report for the week. Mark will do one tomorrow morning as we head into the holidays. What do we got today? Anyway, check our blog. VIX continues to get owned. So, couple of days of volatility getting smashed. Started with Mark's call being along the SPY on Friday. We're now up, what, 3, 4 handles from there. And volatility continuing to come in. Why? Well, good calls by Mark there. We have benign action, right? Market's kind of poking along up, and market poking along up, very hard to maintain 20 volatility that we had on Friday. Just that's a whole lot of movement. So just to give you an idea what that means, right? So if you look at this, okay, so then you go on, let's say you go out to Jan, something simple, right? And we're going to, a couple days ago, let's say we priced the 202, let's say it was the 201, right? Right now that straddles $6, right? So every point of volatility for the straddle, right, is $36 for every point of volatility, right? $36 per straddle. So that's not nothing, right? So 36 cents per straddle. We're down. We were looking at what, 17 volatility, almost at the money, down 3. So the straddle at the money straddles lost almost $1 in movement out to January. Okay, that's about 0.5% for the SPY. So the more benign the movement is, and the less expectation, meaning the market's really not pricing that we thought. We did get the move expected last week out of the market. It just was not the up move, right? We got that first up move. We're up, what's 4-3 handles, something like that, up to 207, and then spent the next 4 days promptly going back to right around 200 SPY or 201. Now we're back up to 205, right? We were talking about this yesterday in our chat room. 205 kind of being a pin area, just at least getting back to even for the year for the SPY. And it looks like we have. And yeah, we got a little, so yeah, I'm looking at commodities across the board. Except for Chipotle, which looks like that E. coli scare is really pressing the stock. I think this is a new low. Anything related to commodities is bouncing a little bit. You keep an eye on this, like junkie or like CLF. Gold's moving a little bit, at least the miners are. Some of the oil producing stuff, MOS, phosphate, or fertilizer commodity up, rig up a little bit. I think even oil is making a slight rebound today. So you're getting a little bit of bounce in some of these, in some of the names from, let's be honest, pretty multi-year lows in a lot of them. Disney is not doing well after the Star Wars. They're going to make $1 billion on the one Star Wars movie. What do they pay? $5 billion for Star Wars. They're going to make 20% of it back in a couple of weeks, and Disney's having trouble. So, but other than that, it just looks like we're kind of not going to do very much. Not the market is it's coming to grips with the new reality. Let's put it that way. And nothing is as bad as everybody thought as of last week, apparently, because there's been no massive shoe dropping or just essentially, let's see how the market adjusts to the no Fed. Yeah, you would think that Disney would do better, but it's starting to look more like, and I will take a look at that today if we have a trade, but do you guys remember, I believe this was the sort of the ESPN crusher, right? And, now, after that, we're actually getting close to that level. This obviously when everything was in the tank, but we're starting to get down to some of those levels. It's certainly possible, but as of right now, it doesn't look like you're going to get any kind of parabolic march out of this thing. So long term, I'm sure Disney will make some money, but as far as the stock going right now, it's not doing well. All right, so with that, we will move into the chat room. I expect volatility to stay weak. Mark and I yesterday, I believe, we looked at 16 VIX. At least we would touch the 16 handle, and it looks like we might break through it today. You're getting some downward action in the futures, but things are starting to look like very ordinary, right? So January future now is almost a full $2 over VIX cash as VIX starts really to adjust for the two holidays, at least for the one holiday, and then we'll start looking at holiday number 2, which is New Year's next Friday. So you should see the cash start to go down. What you really want to see, right, is if there's actual real selling here of this future, of the JAM future. Right now, you're only around down 4.9 cents. Let's see if there really is appetite to hold on to that future. If you see it start to dip below 1750, all of a sudden, everybody looking at risk is going to start to get out of the way a little bit. So at this point, it would take some willing sellers, because now you have pretty healthy, there's the 15 handle for VIX. You've got more than enough contango to adjust for the holiday at this point. So we'll see if they can keep smacking it down a little bit. But if the rally holds, expect that to happen. And of course, we're looking at positions all week in our chat room that take advantage of VIX futures continuing to drop. All right, everybody, you have a good day, and we will see you in our chat. We will also look for our announcements for our Fixing Broken Trade class in early mid-January. Everybody have a good day, and we will talk to you all later.